Welcome to Markets Now. I'm Michelle Rook with Mark Knight with Farmers Keeper Financial. We are seeing higher grains and cattle futures this morning, some new highs over in the feeders once again. But Mark, I want to start off talking about the grains. Down day yesterday, we got caught up in the tariff headlines. Today we're bouncing, so a little bit cooler heads prevailing, or are we just seeing kind of a technical bounce and recovery?
I think it's a bit of both. I mean, the tariff headlines has just dominated the news market. Really, you've had the funds peel back about half of their length in the last several weeks because, every day we come in and there's a different tariff headline. And so we've been hit a little bit. But we've bounced off some technical stuff here, $10 and call it the 450 area in corn, $10 area in beans. And, I think it's kind of important that both of those areas hold. And so far they have.
Absolutely. So we're getting a little technical recovery, as you mentioned, but weekly exports were good this morning, especially when you looked at wheat, but across the board, they were good.
They were excellent, really, across the board, with the exception of meal. Wheat had its second largest exports of the year at 28.8 million bushels. That's the highest since June of last year. So that's a positive sign. We really, on the wheat front, the marketing year is from June till through the end of May. So we've got a couple more months of this year, and we really only have to sell 2.3 million bushels per week now. And like I said, 28 million, we sold 28 million this week. So the USDA may have to make some small adjustments in coming reports on the wheat front. Corn was good, 38.1 million bushels. We're well ahead of last year's pace. We only need to sell about 12.6 to reach the USDA's target. And it's very likely that USDA is going to probably have to raise exports. If anything, they're going to have to raise them in corn, I would think for sure, unless, tariffs come in and when Trump pushed those tariffs back to April, the Mexican tariff, especially on corn, is the most important one. And if we can avoid several months of tariffs with Mexico, I think the USDA will definitely need to probably raise exports.
Absolutely. But just the fear of those tariffs, as you have pointed out, has caused the funds to do some liquidation over in the grain trade. Do they continue to do that until we get to April 2nd and maybe this next round of tariffs comes in, or especially as we get into this March 31st acreage number?
Yeah, that's a great point. And that's really what we're up in the air on. They're net short beans, wheat, and everything else. And they're still long. They're long corn and cattle. The corn one is the one that kind of makes me most nervous because I talk to hundreds of farmers on a daily basis, and it's given what they've told me about their planning intentions, and the seed guys I talk to and the elevators out there that I talk to, I'm fearful that we're going to have a huge corn number on that March 31st report. So that's the biggest fear factor that I have with corn, at least in the short term. I believe we'll have some weather scares and things like that as the season progresses. But from a short-term standpoint, that corn number would scare me. And if I was a fund manager, I probably wouldn't want to necessarily take a lot of risk going into that report. So we'll see if they maybe continue to liquidate a little bit in the next few weeks leading up to that March 31st.
How much of it is baked in already, though, do you think?
Well, look, the Ag Forum gave us a 94 million acre number. There are guys out there that are printing 96, 97, 98 million acres in their in their newsletters, and some of that obviously is to grab attention, grab a headline maybe. I'm hopeful it's closer to 94 million. I have in my head 95 to 96 right now, but if we're on the upper end of that, it is not going to probably bode well for corn, at least for a short term. And keep in mind, these are intentions. These aren't going to be planted acres. So I think you'll probably see the highest. I would anticipate this report to be the highest acreage number of the year, and probably dip down from there. But beans have some work to do if they're going to buy acres. Based on cost of production, break evens, that corn number seems to be around 450, get plus or minus, call it 15 or 20 cents. The bean number is closer to $11 for guys, and we're sitting down here at 10.17 in new crop beans. So it has some work to do. It doesn't mean that we necessarily have to run to $11, but I think that I think beans need to gain on corn between now and actual planting of acres. So.
Yeah, definitely. All right, let's end on cattle. As far as that market goes, we're up again this morning. Feeders have continued to crack out new highs day after day. The tariff news is actually positive for that cattle market, isn't it?
It absolutely is. We import, call it ballpark, about 10%, and those come from Canada, Mexico, and Brazil. So where we're getting the negative tariff news on the grain markets, it's actually a positive for U.S. cattle if we kind of limit our imports and make those more expensive. So yeah, you're seeing all-time highs in the feeders, and so that market, obviously, we have a lower herd numbers that have really led to this, but the tariffs have just increased that tenfold, and the getting in front of guys are not willing to short the cattle because it's just been ripping higher. It's been the strongest market out there. So,
and it's been very resilient in light of a almost 10% correction in the stock market. But if it keeps correcting, can cattle hold up here? Can some of the other ags hold up here?
It's a great question. I think we really got to watch the tariffs close. Like I said, the herd is smaller than it has been, and so I think yes, it can. But look, anytime you see a market run higher like it has, there can be some pretty sizable pullbacks at any time. So just be cautious. I'm encouraging my guys to put on some hedges up here and protect some of these prices that we've gotten, but it sure looks like we're, all indicators look like we're going higher from here.
Yeah. Money flow does impact more than just the cattle market, especially if we keep melting down in the stock market. Mark, is it possible we could see money come out of any other sectors of ag just as folks rebalance portfolios or have to make margin calls or anything like that?
Yeah, I think that that's a strong, strong possibility. I mean, the funds are still long several 100,000 contracts of corn. So my biggest concern would be for funds to pull back in corn and or cattle. And so, those would be the two markets that I'd be most fearful of from that standpoint.
All right. Thanks so much. Mark Knight joining us from Farmers Keeper Financial. And that's Markets Now.